Hello traders, today is the 8th of April. My name is Neville Hornsey, market and issue trading. And today I'll be looking at the Parabolic Stop and Reverse indicator. Okay, first of all, the dots on this chart here below price action or above price action, you see it making these like little waves of dots, is the Parabolic Stop and Reverse. And the way you find that is if I just delete this and we go to indicators and we look for stop and reverse, you can go Parabolic SAR. So there you go. Go into the cog and you can change the start, increment and maximum. I generally leave it as default, but I do like to sort of make it a little bit easier to see with a white or a yellow. So here we go. Got the Parabolic Stop and Reverse on there. On a daily time frame, you can see here, say from the 17th of March, price action was going higher. Parabolic SAR sort of trailed at this sort of distance. It gets tighter as price comes back down towards it. And then eventually price goes through the dot and then the dot reverses up here. So that's what it looks like. If I just turn it off for a second, I generally don't use indicators on the chart. Maybe I'll use momentum as seen in the EMAs, but for price action and general momentum, you can see here you've got fractals. That's just a visual really to sort of show where the swing highs and swing lows are. So we've got a swing low here, then we've got a swing high up here. Obviously we've got a fractal there, which is higher than this one, but we're just waiting for the next green triangle. Then the next red triangle is here, and you can see that it's higher than this previous one there. Then we've got a green triangle here, which is higher than this one. So essentially, trend is going higher, price action is going higher, momentum's going higher. Up until this point, where we get a big spike through the 0.7, we discussed it before this week. And then as we come back down, now we've actually got price action yesterday coming through that previous fractal swing low. So at this point in time, we are probably making a sort of change in trend. We've got this level here acting as potential resistance now. If we keep going down, you can see that price actions come through this swing low as well. And if we look at this one, price actions also through this one. So we've come through 3 levels of old support. And now we're looking for a change in direction. Now the Parabolic SAR, if you see here on the 5th of April, actually the sort of dot got burst before the break of market structure. So it gave us an early indication that there could be a change in trend. So at the end of the day, when you come to your charts to see what price action actually occurred, you could use the Parabolic SAR as a filter for the next day's trading. You're looking for change in trends, you're looking for a change in market structure. So on a daily chart, we had an early warning on the 5th of April. And then yesterday, obviously, price came through, closed below market structure, and now we're looking for a change in trend. If we go to the utrain.com Forex heat map, we can see that the New Zealand dollar is currently the weakest currency across this board. Euro is one of the strongest, along with the Canadian dollar. The US dollar is pretty strong as well. So looking to go short New Zealand dollar versus US dollar. So that's all lining up. We've got price action, momentum, and essentially relative strength all in our favor if we're looking for shorts. Now, if we go down to the 30-minute chart, obviously, the smaller the time frame, the smaller the waves. Now we're sort of seeing this Parabolic SAR just being a little bit more choppy. If you were to try and get short every time it burst through a bubble, you'd probably get stopped out either for break even or, it's very hard to sort of get a trending move. So for now, Parabolic SAR for me becomes kind of useless apart from looking for where potential breakdowns happen. So here we've got London Open, 8 o'clock my time. On the London Open, it took out the Parabolic SAR little bubbles or dots here. And you can see here, it took out a swing low on this fractal as well. So potentially, here is the momentum to the downside, sort of showing that, today's price action is going to be going lower. Now, obviously, if you were to take a breakout trade on this, you could have potentially put your stop above the Parabolic SAR, and now you could be trailing it. And now you're sort of seeing price action come up to meet it. So, your profits are being eaten into, your stop loss is trailing down. And at some point, price action is probably going to meet this, and then you could get stopped out. Obviously, if this price action was to go higher right now, and you're taking a breakout at this level, 0.68714, Parabolic SAR hasn't even come back below that yet. So you wouldn't actually be at break even. So, you know, maybe it's not the best idea to use it intraday as a stop loss. But like I said, on a daily time frame, it's just a good filter for sort of identifying these potential trades. So going back to the 30-minute chart now, I'm actually going to turn off the Parabolic SAR. So how would I trade now? Now I know momentum to the downside on the daily time frame. I know that price actions coming through market structure. If I just tidy this up, we can see here, that's where market structure sort of changed. Looking for continuation to the downside. We've got a big imbalance on the London Open. So for me, I'm now looking for a trade either at the sort of low of this swing low here, or at a low from previous. So here we've got this candle here, 730 candle, that low hasn't been tested. So for me, that could potentially be a good area to look for a short, as could this swing low here. So now I've got a zone to look for a potential trade short. So if I just mark that up there, make it red to indicate that we're looking for shorts. Now, like I said, with the Parabolic SAR, we did have a break here. So our stop loss could go above this initial dot, and that sort of ties in with this swing high here. You can see this green triangle is the fractal. So we could be putting our stop there. We look to the left, we've got this market structure. So potentially we could get a test of that again. So maybe we should look for another place to put our stop. And that could essentially be up here. So we've got a swing high here. You see some Parabolic SAR was there before. So that indicates that's a swing high. You can turn all this off now. So we could put our stop loss up there, and we're looking for an entry here. So where would our target be? If we go back to the daily, look to the left, we have this big impulsive move up. Then we had this sort of range. Now we're breaking down through that range. So potentially to the downside, we've got this daily high here, or we've got this daily high here. So I'm going to make these green. Now, because it's on a daily chart, you know, we are expecting to sort of see a breakdown, retest, continuation to the downside. So I'll actually be targeting this lower high. So 0.67917 would be the target, just below the 0.68. That's obviously a big magnet, that sort of big figure. So I think we get through that. Now, going back to the 30-minute chart. So I've identified where I want to get to in terms of profit. So if I put my short position indicator up, so profit target's going to go there. Stop loss, I said, is going to go above or at this swing high here. So now I just need a reason to get short, so an entry, and I want my risk to reward ratio to be at least 1 to 2. So if I just turn the magnet off, I'm looking for this risk reward ratio to turn to 2 now. So that's here. So essentially, if I was to get short now, let's just do it. So if I get short now, you can see I've got a risk reward of ratio of 2, got my stop loss above a previous swing high, is above this intraday swing high as well. So there's a couple of levels of resistance to get through before we get to my stop. So my stop's pretty safe. And now I've got a target all the way down here, 0.67917, risk reward ratio of 1 to 2. So for me, that's a good enough asymmetrical trade. It's in line with the daily time frame. Like I said, making lower lows. And if we look back through the last 3 or 4 daily candles, you know, the highs are coming down, the lows are lower. So a good momentum to the downside, good price action, break of market structure, and a decent target to the downside, you know, which is essentially quite an easy target to get to because the 0.68 is a good magnet. Right, so that's how you could identify these type of trades early with the parabolic SAR, so the stop and reverse. You know, market gave us an indication that this trade might be on the 5th of April. If we just go back to the 30-minute chart and sort of scoot back to the 5th of April. So the 5th of April, it's here. You know, we had on the 30-minute chart, we saw that this was a pullback. We saw that this broke down, saw that there was a change in market structure here. Then we had this sort of big spike up on the FOMC. So if you'd already been waiting for, you know, a potential change in trend, seeing this candle on the FOMC might have given you reason to get in just on its own. So hopefully that has given you some sort of ideas of how you might start looking for some trades at the end of the day for the next day. And yeah, good luck today. It's Friday. Maybe just have a look through the charts rather than trading. There's not a lot happening today. And obviously traders will be trying to sort of de-risk before the weekend. And yeah, I'll speak to you again next week.